Yeah.
Are they there?
Yeah. Hi, good evening, everyone, and welcome to the Waterbridge AMA session. This is our second session, and this is second of 5 sessions that we'll be doing all through April. Please do give us a couple of minutes till we just patiently wait for everyone to log in, sign in, and we shall start in a couple of minutes. Good evening, everyone. Thank you once again. We're just giving everyone a couple of minutes to join in and get their connections going. In today's webinar, we'll have myself, Anjali, and my colleague and partner at Waterbridge, Ashish, take you through the session. Awesome. It's 4:05 and 4:06 by the clock, and I guess 5 minutes is good to wait for everyone. So let's quickly start with introductions while we continue to allow the other participants to flow in. For those of you who join in late, not to worry, we will have a recording of this session up on our YouTube channel immediately after, later in the day. So welcome everyone for our second Ask Me Anything session with regard to Waterbridge's FastForward program. FastForward, as you know, is like our dedicated annual seed program where we run a very democratic, open, cohort-led application process and a call for applications, and where we commit to accelerated seed funding within 30 days. I think a lot of times, and from last week's AMA, we do get asked why we launched FastForward. So I thought it will help to begin with a quick 2-3 minute overview of why we launched the program, the key benefits of the program, before I hand it over to Ashish for his own introduction and to straight away dive into the Q&A. So hold on to all your questions. And as and when your questions come up, I encourage you to type them into the Q&A box that you could see at the bottom of your Zoom panel. And Ashish and myself will try to answer as many of those questions as possible during today's 60-minute session. Coming to a quick introduction about why we launched FastForward. FastForward, as I mentioned, is a dedicated seed program, and we define seed as a company that requires less than $500,000 in early stage funding. Waterbridge, as many of you would know, is a early stage tech-focused VC. We invest anywhere from like $250K under FastForward all the way up to like $2.5 million until your Series A round. And as we kept interacting with founders and we conducted surveys of founders who had pitched to us over the 5 and 6 years in which we have been in business, one of the key feedbacks we received from the founder community was that the entire process of early stage fundraising is extremely long drawn, it's complex, it's fairly unsettling and very indecisive, and you end up sending pitches into what seems like email black holes to VCs, and you never hear back from them for weeks together. We also got concerns around terms and conditions and whether there's any fairness and transparency on the kind of deal terms and the kind of rights that early stage investors are seeking. And I think the third and most important feedback was really what's the value add that VCs bring to the table beyond capital, and who is really the right VC to partner with at the early stage. So at Waterbridge, we all took this back and kind of brainstormed about if we want to launch a dedicated seed program, what could we do differently to ensure that this is not another lost in the crowd, accelerator, incubator, or another cohort-led 6-8 week kind of a program. And that's how we kind of came up with FastForward, and those were like the seed to FastForward. So FastForward simply cuts through the noise and the chase. It is a program with a seed funding commitment. It doesn't follow a cohort, so it doesn't go as 6 weeks or 8 weeks. It's simply a call for applications during the summer, April of each year. We're currently in our 2nd year. And we commit to responding to every single application. So our thesis is simple at FastForward, that the most deserving founders, we shouldn't be wasting their time. And a single application through a fully online and remote process could get you to pitch to up to 15 VC partners, raise 500K in funding from Waterbridge as the lead, and dollar plus more together with our VC partners. So the premise really is to enable early stage founders to raise, larger rounds faster and earlier and make it time efficient for both of us. In terms of the second part around fairness, transparency, we've done our best to put out a term sheet template on our website. And through this webinar, as Ashish answers questions, what I will do on the side is paste links to various our website, like material that we've put out there to enable you to submit a better application and therefore improve your strike rate in getting called for a pitch. So we have tried to put out key terms and conditions out there in terms of what our deal constructs are, what are key rights that we're seeking. And the third point on the ecosystem partnerships, this is how I think FastForward has become bigger and better than last year and is really a standout program compared to the rest, in that a single online application means that you just apply, submit, and forget about the rest. And we as Waterbridge at the back end will really do the grandfathering, if I may, and socialize and circulate your application among not just VC partners so that we can build a larger round for you, but also with corporate accelerators. We've tied up with, best in class, the biggest names in the Indian corporate accelerator ecosystem. We have Microsoft, we have Accenture, we have Amazon. So we will kind of give you a VIP access into their programs. And finally, we know that you're an early stage company and therefore cash runways are critical. So we have gone out there and sought the best credits and discounts with, global best in class SaaS tools and cloud tools in order to ensure that these credits reach you from day zero. So this is really a very quick overview to FastForward. We had our first AMA session last Tuesday and we were really running out of time. So it got us extremely enthused and we said, let's schedule one every Tuesday. So eagerly looking forward to, to seeing all your questions. So I do encourage each of you to quickly start punching in questions now in the Q&A box that you can see at the bottom of your screens. I'll now hand it over to Ashish to quickly give us an introduction to himself. And I will also look forward to receiving questions from all of you, and we'll try our best to answer them. Ashish, over to you.
Yeah, thanks, Anjali. And that was a very apt encapsulation of what FastForward is all about. And quick introduction on the firm. And Waterbridge has started investing in India from 2016, and we are now investing from our second fund. And we are very proud that the core thing to that, the most important value that is close to our heart is that we are founders first. We really understand. We want to appreciate that if someone is becoming an entrepreneur, we go out of our way to make sure that we are there for them, and that initial thought is something that was behind doing a FastForward thing. So I think I'll keep the introduction short because I can see a lot of questions popping up, and from our past AMA's experience, we need to kind of focus more on the questions. Anjali, maybe.
Awesome. Thanks, Ashish. So I'll try to aggregate them so we don't respond to a lot of them. Once again, before we start, just want to reiterate that we have tried to answer as many frequently asked questions as possible on our website. So I would encourage you to head to fastforward.waterbridge.vc. I'll punch it into the chat box shortly and get answers to any top of mind questions that you may have. So first one, Ashish, for you from an anonymous user is that on the valuation. So we do ask founders to pick one of two options, which is the 250K for 15% option and the 500K for 20% option. I think a lot of founders want to know, is this set in stone? Is this negotiable? Is this flexible? And what's the thought process behind these two options and choices?
Yeah, no, I think that is an important question. And if I'm a founder, I think the valuation is one part that I'm too passionate about, because I want the business to be valued at the right valuation. So our thought process behind doing two simple structures of valuations is that we want to keep it simple, we want to keep it objective, and we don't want to create a lot of confusion around what the valuation is going to be. Because we want to be very, very transparent. And this is important because we have to be fast. The speed of processing an application is key here, so that we can get back to a founder or a founding team with a definite framework. And therefore we need to have a good starting point that, look, this is the structure for the valuation that is available, and these are the standard terms. So these valuations are essentially part of the standard terms. Anjali, I hope
Awesome.
I've covered all the aspects of the question.
Sure. Yes. The only thing I'll add to that is that, of course, this is only on behalf of WaterBridge. But if we do end up raising a larger round and have some of our partner VCs participate, and therefore, depending on how excited we are about your opportunity, if we end up raising more or less, some of these constructs will obviously undergo a change as appropriate. So great. I think the second question is a private limited company a necessary prerequisite?
See, private limited company is usually in India the most commonly used vehicle. It is not a prerequisite, but you need to have a legal entity. So if you're not doing a private limited company, you'll end up doing an LLP, because that is what I can think of. But there are several nuances around having an LLP raise money, and that is the reason why the common market practice is to do a private limited company. Not that we are advising you something in favor of the other, but private limited company and what it can do and cannot do in terms of shareholding and shareholder rights and other things is a more preferred vehicle, and this is fairly common across the industry.
Great. A question now from Vivi in terms of what stage can they approach FastForward, and is it necessary that they need to be at market launch, revenue, complete product? What stage would you recommend, Ashish?
So look, this is a seed program, and seed program by definition means it's an early stage thing. So if you look at the form, it says that you should have incorporated a private limited company, or you should have at least incorporated a legal entity, and the founding team should have come together. So I think these are important ingredients. In terms of all other things, it will depend upon how exciting the idea is, how exciting the space is, what the team is wanting to do about it. So we are not stipulating too many restrictions, because we are cognizant of the fact that in early stage we want to keep the things as open as possible. But yes, you should have thought through the initial framework, not and therefore another form says you should have a legal entity already incorporated. And I know we are therefore also asking about the cap table and other such details in the form.
Yeah, absolutely. And this is a good question coming in from Shreya Khanna in terms of, do we have any sector focuses and sector sweet spots in terms of how do we choose sectors?
So sectors, if you look at the sectors, we have divided them into two large categories, and then there are subcategories. And if you look into the form, there are sectors. But from WaterBridge perspective, we are fairly sector agnostic, and we are investing across the length and breadth of technology businesses. There are certain areas which we don't prefer within technology. For example, where hardware is involved, or where a lot of capital needs to go in before you can hit the market, and therefore those are the only subsectors exclusions which are there. And to give you an example, like for example, someone doing a solar photovoltaic cell is something that we are not likely to invest in. And so and that is just an example, and there are more to that. But if you look at the form, that kind of gives you a fair idea what is what are our preferences within this larger definition.
Yeah, I think a next question along the lines of what we already answered before, in terms of it's not necessary or a must-have for a private limited company, but we would encourage it. So I will skip that since we already answered this. And can we apply to WaterBridge before the FastForward program? ends, just want to reiterate that applications are open all through April. So you have like a good 3 more weeks till the 30th of April. Having said that, applications do get processed on a first come, first serve basis. So while we don't have a set number of deals that we wish to do, obviously the sooner you apply, the faster you get responded to and increased probability. So I wouldn't encourage you to wait till the 30th of April, and definitely hit apply today.
Yeah, no, I think that's a fair advice.
The next one from Nandita here. I'll take some of the questions from those of you who have already applied offline, since some of you are raising questions around the JOT form not really giving you a copy of your submissions, or you're not sure whether it's submitted or not. So keep those coming on the chat box. I'm keeping a track of them separately, and we'll get back to you offline via email once we can check with our applications team. Nimish, great
as a
question.
Concept, it needs, other than what Anjali said, otherwise you will actually, the process, the way it is designed is that you will get a copy of your job form.
Yes, I would. You will ideally get a unique submission ID as well as a copy of your own responses. If you haven't got that, I would encourage you to just drop in a mail to fastforward@waterbridge.vc. I'm in the process of just punching that into the chat box, fastforward@waterbridge.vc, and we will quickly have a look at the backend and get back to you as soon as we can. Do also, for those of you using the chat box, I don't want to discourage you, so do give me the name of the company as well as the primary founder applying, and I'll try my best to turn around as much of this within this hour. Nimish, great question that I'm now going to throw at Ashish in terms of how sincerely is TAM scrutinized, and what amount of error is acceptable, and especially for companies that are working in blue ocean markets and where they're not able to give a very direct analysis. How can you help them articulate what's a good market opportunity?
I think this is an excellent question, and before I answer, giving a direct answer, I'll just give you a small background. See, when we are looking at early stage applications, we are not expecting that you would come up with answers which are expected out of a series E, A, B, C, D, E, F of a stage company. And we do understand there will be a lot of hand-holding you may require around assessing things like TAM, and also accessing many other things, and that is where WaterBridge adds a lot of value. So you don't have to worry about giving us a very precise TAM or giving supporting how you have arrived at TAM. What is more important is that directionally what is the space, what is the opportunity space that you are wanting to operate in, directionally what is the size you're talking of, and also what are you wanting to build within it. That is far more important. We will not worry too much about precise calculations of TAM and other things.
Thanks, Ashish. We have a question on a couple of things we've put out on the term sheet. Can you help explain the meaning of founder vesting and anti-dilution?
Yeah. So although these are so founder vesting is basically when we are investing into a company, the founders are already holding shares in the company, and when an investor is putting money behind the promises that have been made, they basically are saying that the founders will work together, they will execute the business plan, and they will execute their vision, etc., etc. And the investors are agreeing to all of that. To make sure that the founders and investors remain aligned over a longer period of time, the vesting mechanism comes into play, which basically means that if a founder is committed on a long-term basis to his venture, the shares which he was holding on day one, he would have earned them back. And just to give you a small example, explain this through an example. Typically, if, for example, the vesting says that 20% of shares will vest every year, which basically means if founder starts with say 1,000 shares, the 1,000 shares, although he's owning those shares, but he has to earn them back. So every year, 20% of them will be earned by him. So 200 shares per year over the period of 5 years. So he'll earn back 100% of his holding. This is also to ensure that should a situation arise where one or more of founders are leaving the company before all the shares have vested in them, there will be a situation where a new founder or founders will need to come back, will need to be recruited into the company, in which case there should be some shares that are available to be given to them so that they remain aligned. So this vesting mechanism helps into making sure that investors, company, and the founders remain in long-term alignment. Anjali, there was a second part to the question.
Can you help founders understand anti-dilution?
Yeah. Anti-dilution is, for example, if you're an investor is purchasing a share at 1,000 rupees per share, and the expectation is that in future rounds, the share price will move up as the company performs and as it raises future rounds of money. And this is the normal course which the company is expected to take. However, for whatever reasons, if the company issues the subsequent shares at, say, lower price than 1,000 rupees per share, the investors who have come in at 1,000 will lose money. Only because the valuation of the next round has been artificially tinkered with. The company is doing well, but someone has actually lowered the valuation just to take advantage of a particular situation, to bridge this kind of an expectation gap, where, and also to protect the alignment of the investors. They are given an assurance that, look, if some adjustments are done, they will be compensated. So this is just to make sure that investors don't end up losing money only because of some artificial adjustments in the price of the company.
Great. Thank you so much. And Vivi, you seem to have attended the right AMA, because Ashish here is also our healthcare sector expert. So Vivi wants to know if we have any positive biases or preferences for healthcare, because he's building a healthcare mobile app, and if he can apply.
Yeah, sure. We encourage. So, look, we, it is unfair to say that we are like, if I say yes, I'm super excited about healthcare, people should not draw inference that we are not excited about other sectors. So I will therefore not say that, only healthcare. We are excited about everything. But to answer about your specific question, healthcare, yes, we do see healthcare as an important area. If you look at our website, we talk also about in our values, which guide our investment thesis, that we prefer to solve big, large, real world problems. So if you look at India, healthcare is definitely a big, large, real world problem. And if you have solutions to a specific problem or a larger problem set, we are definitely excited to look at it. But as I said, please do not interpret this answer to mean that we are excited about healthcare and not about anything else. So yeah. So our lens is more about that. Look, we are focused and excited about all real world problems, and healthcare is definitely a real world large problem as far as India is concerned.
Great, thanks. I think a lot of questions coming in on founder background preferences. And is there anything specific we look for while evaluating founding teams? And especially later on, there's another question, since these are seed deals and very early stage and therefore very little business metrics, how do we actually, what kind of lens do we apply while evaluating founder teams?
I think this is a really nice question, and this is an important thing that all of us should understand. When we are, so in terms of when we are looking at evaluating a business opportunity, whether in FastForward or otherwise, we definitely first evaluate the business opportunity. We all evaluate the larger market, the specific problems that you're targeting, your solution, what you're proposing, and whether that will scale, not scale, and etc., etc. But after having convinced that, okay, it's fine, this is something worth doing, the most important aspect is the people who are out there to do this, which means the founders, because we think that founders are like soul of a company. of a startup. And it is very important in a early stage that we get comfortable around founder and founder backgrounds. When we look at founders, what is it that we are looking at? So we are looking at trying to understand why are they solving what they are solving for? What is the trigger behind that? Second, from where is their long-term alignment coming from? For example, opportunity cost. Are they incurring an opportunity cost, and therefore there is a comfort on table? Yes, these are the people who have long-term passion, and they have enough that they are giving up to build this startup. Then we also want to understand how the founding team has come together. From where is the confidence coming from that they will be able to work together? And because when you are doing startup, it is a long-term journey. The minimum in India it takes for real value to start emerging is 6, 7, 8 years. And whenever we are talking to early stage founders, we are saying that, look, if you're getting in this together, be clear that you're here for at least 10, 15 years. Because unless you are ready to spend that much time together, no, it is unlikely that a meaningful value will come to you as founders. So all of these alignments, backgrounds are important. And in doing this, we also do background checks. We want to understand the people with whom you have worked in past or studied in past, who know you better. And we draw a lot of comfort from all that entire ecosystem which you are presenting to us. And it is not restricted to only the 2-3 names that you will give as part of the form. When we speak to the founders, we do understand, we go deeper into this to understand all of these aspects, because this is one of the most important areas of evaluation. But yes, it is a lot of it is subjective, but qualitatively we do a lot of work on this area, in this area.
Awesome, thanks. I think we have a long question here in terms of, there's a question in the application form on if you are guaranteed a top 3 rank on Google search, what search, term or phrase would you use, and how much marketing dollars do you need to put behind that, in order to reach a certain critical customer mass. So I think the question is, could you help us understand a little bit more on the meaning of this question?
It's basically, in very simple terms, we are trying to help you think that what are you building? Yeah. So just to give you an example, for example, someone is coming from, say, is saying that, look, I am building an Uber for office space. So it's like forcing you to think that, okay, if you are looking at top scaled up plays or business models, and is there a kind of a reference point out there with which you can relate your business, and that helps founder focus on a question that, look, what is it that you're building? What is the key 2, 3, 4 words in which you can describe the entire idea of what you are building? And that this is just to help you think early on in your journey about this important aspect. It's like super elevator pitch, elevator of elevator pitch.
Yeah,
I think I need to add something to this.
Sure. I think, like Ashi said, I would just say that this is especially important if you're a B2C startup, especially driving on the digital and the internet economy. And if digital advertising is your primary way to attract customers, I think all we are trying to gain an insight into is that, what's like the 1 or 2 word description for your company that would best attract customers and drive traffic to your website or to your app. And secondly, as you think of CAC, customer acquisition spends, marketing spends, how much money will need to get plowed into the company in the near term in order to reach a certain X number of customers. So that's really the thought process behind it, because customer acquisition is almost something that you'll immediately start spending on post funding. And we just want to make sure that you've already thought through some of these nuances. Just want to interject by saying that some of you, I think there's Nandita and Ayush, I think I'll come back with the exact name, but those of you who have punched in saying that you're having trouble with the application response, once again, please do write to fastforward@waterbridge.vc. Please do mention your entire name, founder email ID, as well as the entire company's name or the application name if you're not a company already. This will just help us track and trace and get back to you faster. If you have time and if you're still on the webinar, feel free to just send me a private DM with the company name and I'll get back to you during this time. All right, just quickly back to the Q&A. There is a question here on e-waste management. Again, in terms of sector preferences, what are like the 4 or 5 sectors that WaterBridge is bullish about, and is e-waste one of them? I think there's a general question on tech, Ashish, if you want to also take up the fact that tech needs to be the common denominator. Yeah.
So I think it relates to a previous answer that a question that we have just answered around preferences. And look, personally, I don't want to discourage or unnecessarily say something about a particular sector. And similarly, when I refrain saying that, look, we are super hot on this and cold on this, because we understand, we appreciate that becoming an entrepreneur is not easy, and to give a comment that, look, we are not interested or not super hot or cold on this sector is not fair. So what we can say is that, look, we have in the form we have explained, and if you look at the form very carefully, you will get to know what are the key sectors that we are looking at, and the way to look at it is that there's a drop-down menu, and you can see those sectors are named, and there are sub classification under each of those sectors. If your venture is falling in any of those classifications, these are those sectors and subsectors and subsectors that we are looking at more carefully at this point in time. But sector preferences is not something that does not evolve over a period of time. If you have something super exciting, don't feel discouraged by people saying that, look, this falls out of our sector preference. That doesn't make anything. You can still go ahead and pursue your passion and dream. So I'm not answering deliberately, not giving a specific answer, but yes, you should go and look into the form to get an idea of what are the top most actively looked at sectors at WaterBridge. But I will again reiterate, at the risk of repetition, that does not mean that sectors which are not falling in those classifications are a no-go sector for us.
Yep, I'm going to combine the next 2 questions here. One is on the referral/scout code, and the other one is, do we necessarily need to know any partner at WaterBridge or spoken to any of them prior to applying?
Yeah, so on referral code and that partner alliance, so this referral code is not something that you need to have. It is not a compulsory field. Referral code is there to help us identify that, do you know any of our partner firms which are listed there? And the referral codes are unique to every partner firm. And it is just to help us identify, the warm link between an applicant and the underlying partner firm. And the second part of the question was, do we need to necessarily know an existing partner at WaterBridge? No, you don't. You don't have to worry about it. The only reason that section is there is that if you have spoken to someone and for whatever reason you think that you want to speak to a particular partner, we are just giving you the power of decision that, look, if you want to talk to Anjali, you have the ability to specify that you want to talk to Anjali. So this is just option given to you so that you can express your ability and choose.
Got it. Thank you, Nandita and Ayur. I think I have the details I require, and I'll get back to you post this webinar, once again, fastforward@waterbridge.vc. That's like our help desk, and we'll get back to you as quickly as possible. Avinash Anand here is coming in, and we're kind of nearing the end of the questions list. So just a quick nudge for the rest of the participants. If you do have any questions, just keep populating the Q&A section. The FAQ section talks about Fast Forward as a structured program. Can you help us with what the value add from WaterBridge is beyond the capital?
I think this is $1 million question. And so we at WaterBridge are strong proponent of the thing that, money is the last thing that WaterBridge brings to table. We are so keen on understanding our value add construct that unless we ourselves are convinced that, look, this is the value add that we will be able to bring to the table, we will not be able to make an investment decision. So we never invest in a company only because of our ability to put capital at work. We have ability to build cap tables, we have ability to get market access, we have ability to get in access to network firms, and there's a long list to it. And I'm sure Anjali have more specific details around the value add because she has worked hard to kind of put it out there. So I'm just passing this on to her. But the main essence of the answer is that capital, if in our final analysis, our only value add to a startup is capital, we are more likely to say not invest because a value add is core to our investment.
Yeah, absolutely. I think this is a question that was very important to us. So I think in the spirit of the fairness and transparency tenet that we spoke about, we in fact wrote about our value add approach, and I have posted those links on the Q&A chat box. It's in fact against our LinkedIn page. But quickly, like Ashish said, we did internally deliberate this a lot, and we finally articulated it for our own ease as the 5 C's, as we call it. I think A is community. For us, beyond just the capital, we enable you to find your first senior talent, your first customer, your first, enable your global customer, local customer, find your first ecosystem partner, vendor, whatever it may be. But we take it as good as our own responsibility to, as quickly as possible, embed you into the startup ecosystem and community and help you find your first, as I say, customer, vendor, talent. The second C is the cap table, where we actively work together with you to bring like best-in-class global VCs, as well as global strategics and corporates to invest together with us or subsequently with us. You can head to the portfolio section of our website and you will see that there is no name missing from our portfolio's cap tables. We have very reputable VCs from Sequoia to Accel to Lightspeed, and even global strategics like Tencent and Omidyar and Samsung as part of our cap tables. And we take a lot of pride in the fact that we work together with our founders to enable this. I think competency is the third C in terms of just bringing you sector experts, domain experts, global industry leaders to mentor you and to guide you in that 0 to 1 journey. As a firm itself, as I was mentioning earlier, that Ashish comes with a very strong healthcare focus. We fundamentally believe that if we don't understand a sector and we can't value add, then we won't invest. And when you pitch, and one of the reasons we have asked that question, we've even presented our sector slide on the application, is that when we kind of match you to a partner at WaterBridge, we ensure that we're bringing a domain knowledge, expert and a sector expert, so that you don't spend your time, with the basics. Finally, on compliance, I think we are an institutional VC, and we do come with our own bells and whistles, yes. But for us, governance, ESG, reporting frameworks, financial reporting, all of it is very critical from, again, day 0. Even as part of Fast Forward, even though it is a seed program, maybe even as low as a 250K check, we don't really differentiate you from the rest of our portfolio. You are not like a second-class citizen within WaterBridge. We do conduct a full-fledged legal DD from a top-tier law firm, and you will go through that process just like any other WaterBridge company will. It sets you up well for raising further rounds of capital. And More importantly, we connect you with our portfolio founders. We have an eclectic group of senior portfolio founders who have more than willingly agreed to pay it forward and mentor our incoming cohort. And finally, which I think is most critical and most founders miss asking, is if we reserve follow-on capital. So I'm just going to volunteer and put it out there that definitely yes. And if you are one of, even though you're a FastForward seed company, we don't treat you different from the rest of the portfolio. And if you're hitting your milestones, we will definitely secure and support you in follow-on rounds as well. Yeah. Awesome. I think there's a question on revenues. I'm going to skip that because I think we did answer previously that it is a seed stage company, and we do understand that pre-revenue is okay with us. Is the funding restricted to 500K only, and what if the ask is higher?
Yeah, no, I think this is important for everyone to understand. And Anjali touched upon this while she was answering the previous question. If you look at the form carefully, when we are saying $500,000, we are talking about WaterBridge's share of investment. And we are not saying that a company cannot raise a larger amount of money. So we have listed out our partner firms, and it is not like a restrictive list that you can have another partner from outside of this partner group also, from whom, or your angel groups where you are able to raise money. So give you an example, if you are raising $200,000 from another smaller VC or angel group, and WaterBridge is putting $500,000, so you are actually raising $700,000 in this round. And 500 is just our part of the investment program. Anjali, anything that you want to clarify?
I think people are just adding in here saying, can you please clarify if the startup wants an amount? Yep, I think I'll just quickly answer that. The reason we are putting in two options, because as I said, the reason we're able to be fast is if we can put out our terms out there and process quickly. Having said that, nothing is set in stone, and it is a slightly higher or a slightly lower amount that you're looking to raise. I would encourage that you use the very last field in the application form, which is a free-flowing open text / attachment field, where you can let us know the specifics of the round that you're already building or in the process of building and pitching to other investors. There is a question here on if revenue has been created or credited in a personal account before company formation, would you consider that since you are in the process of forming the company or shifting the business to a private limited company, and thus far revenue has been accredited on the personal account?
See, we as an institutional investor, we are coming and supporting an entity, legal entity, which is more likely to be a private limited company. If there are anything which has happened before the company formation has taken place, you can present the data to validate that the ability of your idea to generate revenue and other things, and that will just help support your thesis. But legally, I don't think there's any possible way to transfer that revenue into the entity. So we are not also looking towards that. But yes, it will be a validation that is available to you. You have a data point. Why not share it with us?
Yep. And the last, what looks like at least the last question, and Ashish, for you, is if founders are not working full-time in the startup and they're currently employed elsewhere, does that impact the application?
See, we don't think that a startup can be done on a part-time basis. Even on a full-time basis, you run out of time. Even 24 hours are, often we have seen things that you are running out of time. So we don't think moonlighting or doing it on a part-time basis works. And it is important for us to be clear because one of the why will someone be in a job and raising money in a startup? Is it that they're not sure about their own idea? So you need to be very clear in your mind. You have to be very clear when you're applying. But it is okay if you're in a process where you're leaving from an organization and going to be a full-time. we are okay to look at and evaluate that on a case-to-case basis, but it has to be a full-time, dedicated founding role, not a part-time one.
Yeah, I think good question coming in at the very end in terms of before you give your yes or no decision, do you have a discussion with the startup, or is it kind of the decision is taken remotely without meeting the founders or making the founders pitch to us?
No, I think that's an excellent question. So there are, I would classify the whole application set into two parts. One where, for whatever reason, our team, which is screening these applications, feels that, it will be difficult for us to, have a common path ahead. They come back with a very quick answer and provide you a brief reason why they are saying no. However, in all other cases, there will be a meeting, a telephonic conversation, and a detailed feedback will be given. If we are saying no, you will get to know exactly why we are saying no, because this is part of our, promise that look, we will help you understand why we are saying no, because that will help you improve your and refine your pitch. To a subsequent investor.
Yep, good to see more questions coming in. We still have 10 minutes, so I encourage you to keep punching questions in the Q&A section. We have one in the chat box, just a request to move questions to Q&A, so it's just easy for us to handle. Good question on both headquarters of the company as well as the founders. So I'll break that up for you, Ashish. Does the company necessarily need to be incorporated out of India? And secondly, do the founders need to be based in India? And can the founders be based in the US in this specific instance?
Yes, since it is a seed stage program, we are wanting to do this only for those companies which are based and incorporated out of India. The reason is that if we start looking at applications for companies which are incorporated outside India, there's a longish process where we need to seek regulatory approvals, and regulatory approvals take quite long to come, and we will not be able to meet our SLA, and therefore we have excluded, in fact made a request somewhere in the form that if you are not incorporated in India, please do not come through FastForward. All such proposals can come through the regular pipeline, which is pitched to us, but FastForward is actually dedicated to those incorporated in India, so that we can move fast and meet our SLA.
Awesome, great. And the final question here is on, does revenue traction matter, and how much does it matter relative to the age of the startup?
This is a seed stage program, and coming super early, we will not attach too much importance to revenue. Because even if revenue is there, we don't think that it will be a sizable number to give an indication of the future trajectory of the company. The more important matrices are around the addressable market, the problem, how you are, what is your go-to-market, and and all other alignments which are covered in the form. Size of revenue is not important at this stage.
Great. I think that's a wrap. Ashish, would encourage you to just end this session with any closing remarks that you might have. I think founders always ask us for tips and tricks. So it would be great if you could just spend the next few minutes giving them any tips and tricks on how to submit the most prepared application, if I may, and increase their strike rate of getting invited for a Zoom pitch with us.
Yeah, I think it is important because as a founder, everyone wants to raise money. That is given, and raising money also comes as a validation from an institutional investor that look, yes, everything is something where we think that this can be scaled. So most important thing is that you should be passionate about telling your side of the story. And your passion, with which you tell your story, will reflect in the way you fill up the application. So I will just share some evidences that we have seen in past. For example, there are situations where people are skipping certain sections of the application, especially the optional sections. So not that it is a hard evidence, but it kind of is an indication that someone who is is in a rush to fill in the application and is unable to fill in the optional sections is probably not showing that much passion that behind his own venture. So this again, I'm not saying this is a definite indication, but yes, this is an inference. So we will encourage you to fill up all the sections of the application, whether they're optional or not. And as I said, show your passion, show your belief behind your dream, behind your idea, behind your venture. And our belief will just be a reflection of yours.
Yeah. Awesome. I think that's a wrap then for today's session. Thank you so much, Ashish, for giving us your time and for answering all questions to the best of our ability. Once again, please do head to our website. We have an FAQ section. We've tried to answer as many of these frequently asked questions as possible. Do follow us on LinkedIn. We do post every now and then in terms of how best to get your application to reach us and to pitch to us. And finally, look forward to receiving your application indeed for FastForward and hopefully meeting you on Zoom soon. Yeah. Thank you so much, everyone. Ashish, sorry, you were saying something.
No, I was just thanking you, Anjali. You have been an excellent host here. And thanks for doing this and taking all the pain through coordinate all this. And Anjali, guys, as you know, is the face of this entire initiative that the firm is taking. She has dedicated a lot of her time, and she's super organized. And I really find it difficult how fast she responds to most of the questions that are thrown at her. So if you have questions, as Anjali has already volunteered, do let her know if you're facing any tech issues, anything. You yourself will be surprised at the speed of answer that you'll receive from the FastForward team. And thanks, Anjali, again for all your efforts.
Thank you so much. So thanks, everyone. Do spread the word amongst the founder community and do encourage other founders to apply as well. As I said, there's no set limit on the number of applications that we are receiving, and this is not a cohort-led program. So more the merrier, as I always say. Do follow us on LinkedIn, head to our website, and finally, just write into fastforward@waterbridge.vc with any questions you may have. We run these AMAs every Tuesday at the same time, so feel free to register. Recording of previous AMAs are also available on LinkedIn, on our YouTube page, but feel free to come again, join us next Tuesday if any of your questions were unanswered. Just gonna have a quick look at the Q&A, and yes, Krishna, we will be posting these webinars online. So a recording of this will be hopefully edited to make Ashish and me look more graceful and eloquent, and we will post this on our YouTube channel soon. Yeah. But thank you, everyone. We always promise to start on time and end on time. So in the spirit of that, with 3 minutes to spare, we will end this session and look forward to receiving your applications for FastForward. Thank you, everyone.
Bye.